Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is host Richard Bernoulli. Today is October 30th, and we have returning guest Charles Hugh Smith. He's author, leading global finance blogger, and America's philosopher, we call him. He's the author of several books on our economy and society, including A Radically Beneficial World, Automation, Technology, and Creating Jobs for All, Resistance, Revolution, Liberation, a Model for Positive Change, The Nearly Free University and Emerging Economy, Pathfinding Our Destiny, Preventing the Final Fall of Our Democratic Republic, and Will You Be Richer or Poorer? And also recently, Global Crisis, National Renewal, a revolutionary grand strategy for the United States. And his blog of twominds.com is one of CNBC's top alternative finance sites. And he's recently has the Substack. Welcome, Charles.
Thank you, Richard. I'm looking forward to today's conversation on central planning and its role and its flaws in the context of the Austrian School understanding of economics.
Yeah, we thought in that regard we could focus on China, in particular China's real estate bubble that appears to be popping. There's a lot of challenges. Your thoughts initially on that, Charles?
Yeah, Richard, I think that it's very interesting to look at China's real estate bubble and as a kind of case study, not to slam China, but as a case study of central planning's kind of inherent weaknesses or potential flaws. And so I think the way I would contextualize China's real estate situation is China started with very little credit, right? There was very little debt in their economy, and their housing stock was, way out of date, and they were in the middle of a enormous transfer of population from the rural countryside to the cities for industrialization. So it was a great idea to emphasize real estate, building new housing. To create a workforce, support employment, and then upgrade the housing stock of the nation. So at the start, say late 90s, this was a terrific central planning plan, right? And the 5-year plans of the party in China supported real estate as a key. And then this also worked because, as most of us know, selling the leasehold rights to property is a key source of income for the local governments in China. So roughly 36%, at least that's the number that's been bounced around. So it was a positive industry on a number of fronts: employment, banking, providing mortgages, and then providing income to the local governments. But what happens with central planning is the returns start diminishing as the actual market need is fulfilled. Then the central plan continues production that's not really filling a market need anymore, and then it becomes malinvestment. And so you had some great quotes that spoke to that kind of distortion in an economy when central planning is no longer fulfilling social or economic needs. It's just creating distortions in the economy.
Yeah, and just to point out before we get to those quotes, the magnitude of the malinvestment, you're able to identify these charts from some references that we can provide in the on the website. But yeah, 94 million homes that are empty and 120 million homes that are not even finished yet, right? But I think they still have to pay for the mortgage. Is that the situation? Yeah.
Yeah, as I understand it, then all the buyers have paid up front. And
Mm.
so they've actually paid, they bought the property, but it hasn't been completed. And so they're making the mortgage payments for a half finished unit. And unfortunately, there's some videos around on YouTube that show people living in these half-finished concrete high rises, like under tarps and with plastic over the windows and so on, because they say this is the only house we have and it's not finished, but we need to live here because we don't have an alternative. So apparently, one of the factors that occurred was the big developers took the income from selling the units that weren't completed yet, and then they used that money to buy more land leases. And so they no longer have the funds to complete these 120 million units. And so the government is faced with a difficult decision. If they if they funded the completion of these units, it would end up costing between 4 and 5% of China's GDP. I mean, it's an enormous sum of money, and so that would also be a distortion, if you will. So I think this is a good example of what happens with central planning that starts out looking positive, but no one thinks about the consequences as the benefits diminish. And so then what happens is then there's an entire sector or sectors that are now dependent on that central planned industry, and they are loath to let go of it, right? So then it's like the machine just keeps running even when it's no longer serving the economy or the populace. And so now China has um, the difficult decisions what to do with these 120 million unfinished units. And then because the machine is kind of broken, then the local governments are seeing their revenues collapse from the collapse of the real estate development bubble. And so they don't really have any alternative way to raise money. And so they're having to cut their staff's salary by 20, 30%. These are things we're hearing through social media in China. So the point being, central planning can look like a great idea at the start, but if you don't dial it back and let the market have a role, then you end up having dominoes fall all over the place. Unintended consequences that create distortions that neither the market nor central planning can actually resolve. In other words, like, what do you do with 200 million units that are either empty or unfinished? How does the market clear something that distorted? That's like kind of unrealistic. And then central planning has dug this hole, and how are they going to fix it? And so it's going to be painful no matter what happens. So that's kind of, I think, the case study in China. And of course, we can talk about the U.S. and EU and UK's own experiments in central planning.
Yeah, exactly. Yeah, and as you reference, it seems to have started with the Chinese state incentivizing real estate development to fund the local governments with private capital, because you had the situation where the developers were paying local governments for land leases to develop, and then that would create jobs, maybe 10% of the workforce it got to be, and that was giving middle class savers a place to park their savings, right, in some type of real estate home. And but then it just got out of hand without any market forces allowed to provide pushback on the malinvestment. It just got out of hand, massive, gigantic bubble that's now popping, and laying waste to the household wealth. I think you identified 70% of household wealth in the empty flats. Is that correct? Or
Yeah, that's what the number that's being published is 70% of China's
Hmm.
household wealth is in real estate, the home they occupy, but also many middle class homeowners have one or two or three empty flats as the core of their savings, or they invested in wealth management funds, which are invested in real estate. So because there's no real market there's not an aftermarket for real estate in the same way that we're used to. then the actual market value of these empty flats is unknown. But it appears anecdotally to be huge discounts on the order of 75 to 80% outside of the inner rings of Shanghai and Beijing. So in like third tier cities, it's possible that there's no buying, there's no demand for um, some of these empty units. So in other words, there's like bidless. In other words, there may be no market bid. So the market's going to have a difficult time clearing that malinvestment, and it could knock down the household wealth significantly, which would then be a reverse wealth effect, right? That instead of feeling that they're gaining appreciation and wealth, that the households are feeling their wealth is vanishing, and that of course then limits people's desire to consume more, and then they tend to start saving more. So then that hurts the economy because consumption goes down. So again, unintended consequences when there's no how do you call it? No feedback really allowed in that kind of centrally planned uh, economy.
Mhm. Do you see any parallels between what's happening in China in that regard to the US in the 1920s leading up to the 1929 crash and but then subsequently the US emerging as the world's economic superpower, taking over from the UK, and of course the US dollar rising as the reserve currency. So could this be China's 1929 moment in the sense that within a few years they could become and transition to be the financial capital of the world?
Meet the Cedar Owl, a new economics and finance publication with a focus on environmentalism. We combine the Austrian School of Economics and market environmentalism principles for investing in a sustainable future. Follow the link in the description to get to know the Cedar Owl better, understand our values, our mission, exactly where we're coming from, and the type of content that we release on a cyclical basis every Thursday. Join us in targeting outperforming portfolio returns while making a positive impact on society and the environment through technology. Subscribe now for weekly insights, investment articles, and exclusive content.
Well, that's an interesting analogy, Richard, and I think it's a good one because there's lots of debate, like as kind of well known. If you ask 100 economists what the cause of the Great Depression was, you get 100 different answers, right? But I think that in terms of the Austrian school's analysis, I think a key factor was that lending standards were extremely loose in the 20s. It was very easy to borrow. 10% down gave you 90% margin buying in stocks, and there was a huge expansion of lending for marginal farmland. And then, of course, that demand was in a way artificial, right? Because if people could borrow huge sums with minimal down payments and minimal incomes, then of course that creates a demand for speculative assets like farmland and so on. And so that creates a bubble that when it pops, then the debt is no longer supported by collateral or income. And so you have to write down that debt. And it seems from what I gather that in the US, the powers that be resisted writing down all those loans, writing them off because that would hurt the banking sector and so on. So they just kind of dragged the whole thing out. In other words, like they didn't write off the debt, and so then therefore there was an overhang on the economy that just weighed on the U.S. economy for the whole decade until World War II. So I think that there is a good analogy. I think that China is also incentivized an enormous expansion of credit, and debt. And so the question is, how do you clear that so that you can start fresh? And that's the difficult part. And again, one of the unintended consequences of central planning. It looks great at the start to encourage people to borrow more money and then speculate with it and buy more assets. But then when the asset bubbles pop, then you can't the debt's unpayable essentially. And so then how do you write it down without crushing your economy? So, and of course, I think that the Austrian school foresaw this. This is what happens when you create a debt bubble that then inflates an asset bubble, right?
Yeah, absolutely. And if I can make or say two quotes from the Austrian economists, the first one is from one of the founders of this school of Austrian School of Economics, Ludwig von Mises. He said the boom squanders through malinvestment scarce factors of production and reduces the stock available through overconsumption. Its alleged blessings are paid for by impoverishment. That seems to be playing out now in China exactly as stated. And the other quote is also from Austrian school economist Friedrich von Hayek from The Fatal Conceit, who wrote, "The curious task of economics is to demonstrate to men how little they really know about what they imagine they can design." So again, that's from central planning. It's probably as challenging as having a government manage a rainforest, right? Within all of the intricacies between the plants and the animals, it's extremely complicated, and they're not likely to do a good job. The best is to have minimal government over that rainforest and let the plants and the animals interact. Your thoughts, Charles?
Yeah, I think the ecosystem analogy is sound because that is the way that the economy functions. I think we should grant the state, the government, a role in some of the economy based on this sort of general principle, which is that politics and the economy are not two separate features of the social order, right? In other words, so if the public feels that the market is not responding or fulfilling their desires or needs, then they create a political pressure for the government to address this deficiency, whatever the public may see. So, for example, if we can now see the issue here in the United States is housing is in an apparent shortage. Or a scarcity of affordable housing. And so then, of course, naturally, the people go, well, the government should step in and do something. And so then the government might incentivize building after spending decades of restricting building, right? So like making it easier to get a building permit, lowering the cost of construction in terms of the regulatory burden. There are things the government can do to incentivize things as a political response to the public, and so that's an obvious reality that we live in a political environment. But the trick, I think, is to not try to manage that ecosystem, as you say, in detail, but to set the goals and create some incentives for what the social, the social goal of the policy is, but let the market and the local communities figure out how to meet those goals. And so I think that's a key element. And if we look at the rainforest analogy you brought up, it's like the government's role is to make sure that no invasive species take over, the positive species, or sort of weed the thing out or prune things, but not to bulldoze it. And so that's what central planning is like. There's always a temptation on the central planner's part to go, well, if we just micromanage even more, then we're going to solve all the problems. And as you just said, all that does is create more unintended consequences. And so then you get overregulation and sclerosis, like nobody can do anything because everything now takes years to get approval. And I think that's evident in the EU and in the US, at least on a lot of projects.
And you mentioned earlier the EU as also another example of central planning. Can you elaborate a bit more on that?
Yeah, I think both the U.S. and the EU are pursuing energy policies as central planning, and with, shall we say, sort of politely mixed results. And so that's one example where, again, if you encourage something that's been stymied, like for instance in nuclear energy in the U.S. has had this regulatory thicket around it for decades and public scrutiny and so on, but now there's new technologies, and so the government is now finally attempting to loosen those constraints and try to encourage some development of nuclear power. So there's like an example of how central planning can go from restricting something to sort of trying to encourage it. In the EU, I think another example that I think of as central planning is over-regulating agriculture, and that's an issue here in the U.S. too. So central planning doesn't necessarily seek a particular goal. It can sort of encroach on the market with just over-regulation to where in both the EU and the US, I think we're seeing a tremendous loss of small farms because the regulatory burdens are too high. And so the only way to compete with corporate farms is to borrow huge sums of money and then expand your own production. And so the entire system of agriculture is being weakened, in my view, by reducing the number of players and the scale and form of the producers, right? So that I think is a classic example of central planning where uh, everyone wants to regulate every single aspect, as you say, of the ecosystem of agriculture. And then so a small farm operation, then they have so much paperwork to deal with that it's simply unaffordable for them. And so they either don't meet the regulations and then they're fined or put under some sort of other regulatory burden, or they just give up, and then the economy and society loses its a foundational base of agriculture, and then it becomes dependent on a handful of cartels and monopolies. So that's I think an example where central planning ends up wreaking havoc on the economy by wiping out everybody except the cartels and monopolies that can afford to deal with the regulatory burden.
Yeah, those are great points. Are other aspects from the books that you've written that could be applicable to this challenge?
Well, that's a good question. I think, again, I think that if we look at power and how it's used, whether it's the power of private sector corporations or the power of the state, we want a transparent system that has feedback, right, from the market, so that there's corrective feedback as opposed to just creating a machine and letting it run until it breaks down, which is sort of like a central planning model. So we want the government's role should be first and foremost to create or impose or incentivize a transparent market and use its power to kind of level the playing field and make sure that the economy doesn't get hollowed out, where its policies have destroyed entire sectors that were important to the economy. So in other words, to kind of create a dynamic balance between political desires and needs, the marketplace, and then the government's power of regulation. So, and of course, that dynamic balance is by saying dynamic, we mean that it's constantly in flux. And so, what you don't want is one of those nodes of power to dominate and then distort the economy. And so that's kind of the issue, I think, is how to limit really the government's power. And that's difficult because the government and those people who have risen to power in the government assume that the solution is to grab more power, right? In other words, let's expand our reach, let's micromanage even more. And that, of course, is the absolutely wrong approach. And so it's very difficult for people in a position of power to say, we have to actually do less here. We have to back out of this and let decentralized forces figure out the solutions that work in different sectors and different communities.
Yeah, and it just the size of government just feeds on itself. we look at the indebted Western world governments, they're generally over 50% of the economy, but essentially feeding off the smaller private sector in that sense, which is crazy. The private sector supports the government after all, for function and operation, but when it becomes over 50%, it's almost diminishing returns at that point. Your thoughts on that, Charles?
Yeah, absolutely. And again, to take like the housing situation in the US and in fact Canada as well, that it's unaffordable to a great many wage earners. And so what is the solution to that? And you can say, oh, well, the government should, build, 1 million units or something. But actually, if we go back in time and look at what happened in a less regulated economy, what happened is people added an in-law unit, or they finished out their attic and rented that out, or, and in other words, there's a localized solution to that if you allow it. And so, and that's a positive development. We're now seeing that in the US, where local communities are saying, hey, we need to make this really easy and start incentivizing the creation of secondary housing units on existing, parcels. And so that could do a lot. And again, it's not government controlled per se. It's simply allowing more leeway for the market to find its own solutions within a paradigm of, let's make sure that the housing that gets built is safe, right? But beyond that, like, just let local solutions and market solutions arise within that, shall we say, regulatory sort of structure. But you gotta let go of things in a way, and that's hard for the government to do. So then you go, well, how do we get them to get rid of like perverse incentives and perverse regulatory burden? There has to be a political pressure for that to happen, right? Because if you just let them, operate standard practice, then they'll just keep adding more and more. And so there has to be a political push, I think. And then this is where, you and I, we always talk about educating the public on the fundamentals of economics as part of that, so that the public understands there's no free lunch.
Yeah, those are great observations and words of wisdom, Charles. How can our listeners learn more about your work in terms of where they can find you?
Yeah, please visit me at Substack, Charles Hugh Smith, substack.com, or of2minds.com.
Great. Thank you very much, Charles.
Thank you, Richard.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.